please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me are Surabhi and Anuj. Well, today looks like the best of the Xi Jinping impact has played out, and the bulls may have a problem pole vaulting over the 10,400 mark, which is a bit of a resistance zone. Hurdles may come largely in the form of crude. I mean, global metals are higher, which is positive for us, but crude prices rising can have a multifold impact. Besides, of course, being India negative, it has a potential to push up bond prices, bond yields, and that can be negative for NBFCs. So I'm wondering really if 10,400 is going to be the mark at which the markets will have a longish pause and merely await some cues from the earnings season that will start later this week. Morning, both of you.
Good morning, Lata. Absolutely. I guess that is the biggest headline and the biggest worry for us. And we saw some of that play out perhaps yesterday because bond yields were moving higher. We saw the sell down on NBFCs even yesterday. Morning, Anuj. So with that being the overhang on the market, and a very real overhang, more than trade wars, more than global headlines, how do you look at today's trading action?
Morning, Surabhi. In market, it's all about risk reward. For last 3 or 4 days, risk reward was telling you that perhaps you could be buying. Right now, for whatever it's worth, both the Bank Nifty and the Nifty are at crucial 50-day moving average resistance. So you don't buy here after 4 or 5 back-to-back days of rally. Sure, the market could rally, and sure the longs could make money. But if you're essentially long in this market from say 10,000, 10,100, 200, maybe you just trail your stop and you stay long. If you're planning to buy afresh, we are very close to a big resistance because as we discussed yesterday, we discussed 10,427 and the high yesterday was 10,425. So it's that big, Lakshman Rekha for the market because you start to trade above that and close above that. It's the first higher high of 2018. So buy on dips continues. Perhaps if the market gives you a dip for whatever reason, perhaps you buy that, but you don't chase momentum because I would want this to see if this 10,427 is crossed and is you sustain above that, because if that's the case, stronger shorts will cover that. May take market to 10,600, but on that the risk reward again, as I said, perhaps does not favor a long trade right at the start. You may wait for a bit of a dip. The Bank Nifty's got its mojo back, and on that, what is really interesting is it could make a move towards 25,700. It's possible. It's made a low and it's crossed its 200-day moving average without any fuss. And you got the underperformance also sort of catching up, the ICICIs and excess of the world. That is looking good. We've been talking about FIs being short. Yesterday, for 3 or 4 days, there's been some covering. Yesterday was the first long build-up. 8,000 shorts being covered and 6,000 longs being added. Still net short, so more short covering cannot be ruled out. Just one caveat here, apart from crude, which I think is a risk. Yesterday, the advanced decline was in favor of declines. Yeah. And there was, if you, overall market, and if you take a look at the Nifty Junior, the BSE 500, the broader indices, over there, the advanced decline was well in favor of declines. So the distribution is this first sign of distribution. We'll find out. The Nifty Junior ended in the red yesterday. So did the mid-cap index, I think.
Almost
did, and advanced decline was in favor of declines. Just keep an eye on that, Brent, because distribution phase normally is followed by decline in the market as well, though just 1 day data. So of course we'll need to see.
Yeah. There could be a differentiation coming in from actual fundamental news. It could be in the form of results, or more importantly, I worry it could be in the form of some news coming in from the Reserve Bank. There is so much of expectation that the NPA rules will be tweaked. I wish to God, I hope to God they don't. Because, I mean, they're taking a principled stand, and it is important that, they don't swerve from it. It's important for the banking system that, we have to go over this hump and clean up the system. But there is too much of pressure. Parliamentary panels and businessmen, bureaucrats, bankers, all of them pressuring the central bank. I hope they don't buckle. If they don't buckle, then, 10,400 is a genuine resistance. If they buckle, then for the short term, actually, the Reserve Bank can help the pole vault.
Oh, absolutely.
It will be a near-term positive for stock markets. It's a long-term negative for the economy, though.
Absolutely, but they've been doing that with the form of, the announcements we've seen over the past couple of days, including rolling over Ind AS and other things like that. So
No,
if they oblige this time around as well, bigger party perhaps?
No, my sense is that they gave away the small battles, but they want to win the war.
Okay.
And I hope they win that war.
Okay, fair enough. So banks on our radar as always. There's a lot more, but first let's get started by taking a look at what our wise experts have to say as we get into trade this morning. Jonathan Garner of Morgan Stanley sees limited upside, if any, to year end. Morgan Stanley expects multiples to remain constrained by monetary policy tightening in the US and China and uncertainty over protectionism. According to Jonathan, consensus earnings estimates still look too high and the macro backdrop is deteriorating.
Okay, Mahesh Nandurkar, that's more equity opinion for you. From CLSA says their coverage universe reported earnings growth for Q4 FY18 is forecast to increase by 17%, helped by demonetization hit low base. He says domestic sectors such as autos, media, property and consumer are likely to lead the growth. Says domestic revenue is expected to grow 10% year-on-year, a 6-quarter high. And the low base should help YOY earnings growth for the next couple of quarters. However, Mahesh adds a turnaround in the banking and pharmaceutical sectors will be needed to drive 20% earnings growth in FY19.
Okay, let's get to the money market views then, starting first with the rupee. Pramit Brahmbhatt of Veracity has a neutral stance on the rupee against the dollar. However, with the bias, he says the bias would remain positive for the Indian currency. For that matter, Pramit believes that the spot USD INR pair will trade in a range of 64.80 to 65.20 to the dollar today.
Okay, and the place where the action is the bond market. Dhaval Dalal of Edelweiss AMC says the Indian government bonds have given up some of their gains recently after the 10-year yield touched 7.15 on the back of profit booking after a spate of positive news and lack of follow-on buying in the broader secondary market. Believes that the recent increase in crude oil prices and strengthening of global bond yields may dampen sentiment despite prospects of softer March CPI. Edelweiss expects the 10-year yield to find resistance at 7.35 and then 7.45 the near term from a technical perspective.
Okay, let's talk about global markets then. Overnight, the cues look quite good. This morning, though, of course, there's just a bit of softness in Dow futures. But here's Mangalam with the world view.
Wall Street ended fairly in the green as trade war fears were alleviated. Yesterday's speech coming in from the Chinese premier. So right from the first tick itself, it was just as it played out in Dow futures. So near 400-point gain on the Dow, 1.6 to 2% gain seen on S&P 500 as well as the Nasdaq. The stocks that gained were the likes of Boeing and Caterpillar. Fear subsided. The CBOE VIX was down 6%. Boeing and Caterpillar now are the true gauge of trade war fears. So every time they move up, that means the fears are being allayed. If you take a look at the other stock that was in focus, Facebook, that one was up 4% in yesterday's trading session at a 2-year high after CEO Mark Zuckerberg testified before the Congress. If you take a look at the European markets, however, they too gained in trade. All the three frontline indices mirroring the gains that we saw on the Wall Street. But in the emerging market space, the Russian markets, that index was underperforming, though it moved off the low point of the day given the high prices that we saw on crude. But for this week itself, the Russian index is down 13% given the US sanctions. Asia, however, is largely unperturbed as we speak. The Japanese market down 1/5%. No great shakes in the March inflation data. But if you take a look at the SGX Nifty, indicating a flattish sort of start as far as our markets are concerned.
A little quiet across Asia, as we've been telling you. Hardly any change on the SGX Nifty. It's exactly at the flat line. So then let's take it down to stocks. We've got an interesting lineup as always for you. Our entire team is standing by. Good morning, guys, and happy Wednesday to you. Let me get started with Anuj as always. Anuj, what are you watching out for?
So, Surabhi, first stock is Tata Motors. On the red side, it's shown signs of a 50 DMA halt, a bear market rally which could have culminated because yesterday in a strong market it ended at the low point and there was some delivery-based selling as well on Tata Motors. The other is Pidilite, it's evergreen stock, amongst really the strongest stock in a strong sector. 4-digit stock now, one-way rally since the buyback. I remember, I think it corrected to about 850, 860, and after that just one-way rally and backed by delivery volumes as well. So this remains a really strong stock, just like its products as well.
Absolutely sticky. You said it. Well, on the bear side, what may be sticky would be the NBFCs, because as we just explained, there are enough reasons for bond yields to rise. The global yields have risen as well. Crude will have its own impact. And as you know, Edelweiss's who was that, Dhaval Dalal, pointing out that appetite for bonds is also waning. You know, initially after all that dovish policy, there was a bit of appetite, but probably we went the other side too much. So even the appetite to buy bonds is not very good. Therefore, you know, you might see the impact on NBFCs continuing. Yesterday, Bajaj Finserv was the biggest loser in the Nifty. That might continue.
Oh, absolutely. Quite a few of those NBFCs were down yesterday itself. Let's move on. Anisha is tracking JP Infra. What's happening here, Anisha?
Well, actually, the entire JP group would be in focus today, specifically JP Infra Tech, as we understand from reports that Sudhir Walia-backed Suraksha ARC has actually emerged as a surprise front-runner when it comes to the deal or the bid for JP Infra Tech. Now, we understand that they have bid for around 7,000 crores versus the 5,000 crore that had been valued by Adani. They've also given a very specific plan for the home buyers. They want to give the 2,000 crores as the upfront payment to the lenders, and the rest of 3,500 crores is what they want to use for the construction of the homes and want to complete it over a period of 5 years. The report suggests that the committee of creditors liked this offer because it was more flexible. Let's see what the final decision is, but as of now, Suraksha ARC is a front runner. Back to you.
Okay, thanks for that. Let's move on. Fortis Deal sweetened, Ekta.
Yes, absolutely. So I expect the stock to be in the green today on account of this. The total business is now valued at 155 rupees per share versus 135 rupees earlier. There's a 21% increase in the valuation of the hospital business to 6,061 crores, which is equal to the Manipal Hospital valuation. There will be a rights issue of 4,000 crores post the merger of Fortis Hospitals with Manipal, and Ranjan Pai-led Manipal Education and Medical is going to buy 30% stake from the private equity investors in SRL Diagnostics. So essentially Fortis is going to retain 56.6% stake in the company, and hence there will be no holding company discount as it was earlier for Fortis.
Okay, Ekta, thanks a lot for that. Surabhi, now you know why the stock was rallying. We're discussing
We were talking about it. Yeah, what happened suddenly in the dying moments of trade. Yeah. Okay, well, on that note, let's move on. AU Small Finance Bank, now they're willing to pay you 6.75% on your savings bank's deposits, Abhishek?
Well, Surabhi, they have raised their interest rates on saving deposits in 2 tranches. So, on the first tranche, if you have a balance between 1 lakh to 10 lakh, the interest rates on saving deposits have been increased by 0.5% to about 6.5%. Now, if you have a balance between 10 lakhs to 10 crore with AU Small Finance, they have raised the interest rate to 6.75. That's uptick of 25 basis points from the previous rate. So, interest rates changes are effective from today. Now, just to alert our viewers, now saving deposits actually form close to 31% of the overall deposits of AU Small Finance Bank. Now, in the liability side of the profile, the deposits form anywhere between 30 to 35% of their total liabilities. Back to you.
But is there some caveat, or you know, they should be over deposits over 50 lakh? Deposits over 1 crore. I guess that caveat is there, isn't it, Abhishek?
There are 2 tranches of interest rates. That is what I've mentioned. Okay. So if you have 1 lakh to 10 lakh, it has been raised by 50 basis points. Okay. For between 10 lakh to 10 crore, it is raised by 25 basis points.
Well, actually, this was what Yes and Kotak were trying for the longest
time.
with
the 6% interest rate.
I remember Aditya Puri telling us that, okay, take a taxi and go to the nearest Yes Bank branch. I mean, you can do this, but when you have fewer branches, even then it doesn't really work.
But in days of net banking, I don't know how much they mobilize. Anyway, we will be discussing AU Small Finance in greater detail as we go forward. But Anisha, there is a CS report on AC companies.
Well, yes, Credit Suisse has written a note specifically on Amber Enterprises. Now, they haven't given any rating or call on the stock, but they maintain the outperformed rating as far as Voltas is concerned. Now, for Amber Enterprises, they say that it has emerged as a leading manufacturer when it comes to the ODM space. They say that it has a market share of around 18 to 19%, and in fact, for some of the components, the market share is as high as 80 to 90%. They also like the fact that they are scaling their non-EC business, which is around 20% of their overall business. They make a note that over the 9 months they have performed well. Their working capital requirement is low, as well as they are throwing up cash. Overall, they like that business in the sense of how it has been progressing, but they haven't given any explicit call on the stock.
Okay. All right, let's quickly get to MGL. That will be an important stock to watch and offer for sale.
So the stock will be under pressure because British Gas is selling between 7.5 to 12.5% stake via block deal today. The book was launched last evening, offering of close to 4.5% discount. The stock had been under pressure for the last few days, and today, given the discount, the stock will be under pressure again today as well. And we've seen historically, when a large promoter sells stake, the upside looks capped at least in the near term. So that will happen in MGL as well. And today, because of the block deal, the stock will be under pressure. Remember, there is a 90-day lock-in now for British Gas, and they still hold 32%. So that hangover will remain at least in the near term for MGL.
Oh yes, and MGL, we were wondering why it was down so much yesterday. And if you see the futures open interest for MGL, there was quite a bit of jump in open interest. What was interesting was that even IGL actually fell in sympathy yesterday.
Gujarat Gas, IGL, all these stocks were down quite a bit
So it could be
yesterday.
interesting, because MGL of course had stock-specific news, so perhaps others might recover a bit. Sorry.
Okay, well, Nigel, Federal Mughal.
Well, there was a deal that was announced yesterday, Lata. Carl Icahn is going to be selling Federal Mughal, that's the international company, to Tenneco for more than $5.5 billion. Why is that important for us? Because Federal Mughal Goetz is the company that's listed on the Indian Stock Exchange. So at some point of time, once this deal gets cleared, then in fact there'll be a mandatory open offer that will have to be triggered because it's a change of ownership at the global level. So watch out for Federal Mughal Goetz in the time to come.
Okay, worth keeping that in mind for sure. Thanks, Nigel. Lots of other stocks are also in the news. Sonal's here to wrap them up for us. Sonal.
Thanks a lot for that, Sir B. Well, Brent prices have jumped to the highest levels since 2014 at that $70 per barrel mark. So I expect ONGC to gain from that, but OMCs might be under pressure. Other stocks that I'm watching for is India Bulls Real Estate and Oricon Enterprises, as they've entered into a joint agreement to develop a land in Worli. Though they have not given the valuations, the land size is at around 3,500 square meters, and India Bulls Real Estate will be getting rights of around 2.5 lakh square meters for developing and leasing that land. So expect those two stocks to be in green. Phoenix Mills, now Canada Pension Fund, has additionally invested around 930 crores in one of their Bengaluru malls. This was already decided, and now total investment in Bengaluru rupees, and this gives them more visibility for better pipeline and more acquisitions going ahead, and expect that stock to be in green as well.
Okay, absolutely. Yeah, it's commercial real estate, retail and commercial where the money's coming in, right? Residential still sort of stuck. Anyway, let's recap our list of top 10 stocks for this morning. Stocks expected to gain include Pidilite, JP Infra, Fortis, AU Small Finance, Amber, Voltas, Federal Mughal, ONGC, India Bulls Real Estate, Oricon, Phoenix Mills, while stocks expected to be under pressure are Tata Motors, Mahanagar Gas, and oil marketing companies, thanks to the rally in crude oil prices, along with NBFCs because of the rise in bond yields.
Yes, crude will be an evergreen theme for India. That puts a $71 crude will always put us at a disadvantage. And therefore, are we going to see 71 and more for a longish bit? I guess much will depend on the West Asia conflict. But David Lennox, the analyst at Fat Profits, is joining us to tell us what can be the view on crude. Good morning, David, and thank you very much for stopping by. Well, that is the question. Should we get used to a crude over 70 for a better part of, say, this quarter?
Look, certainly if you have a look at the factors that are blowing towards the tail of the oil price, you would expect to see higher oil prices going forward. And that's what we've been calling now for some time, that we've expected those prices to climb as we move into the northern summer. It would appear, however, that just prior to us going into that summer period, some of the OPEC nations are starting to actually indicate now that they're more inclined to want to see the oil price rising rather than staying even where it is or falling. So that would suggest to us that there's going to be some further action perhaps coming out of OPEC regarding their 32.5 million barrel ceiling. So we're watching that very closely, and with that the market's gaining some confidence as well that we're going to see perhaps OPEC continuing to support its 32.5 million barrel ceiling, and we've seen those prices rising accordingly.
David, morning. So one is the market fundamental. The second is this impending geopolitical uncertainty. I mean, if there were to be some of those strikes on Syria, then in that interim, do you expect a big shoot up in prices?
Look, certainly if we do see perhaps military action by the US in Syria, there will be some rippling effect out of that across the broader Middle East region. But at this stage, Syria is not a very significant player in the oil market in the region. So one would expect any movement in the prices to be somewhat spiky and probably retreat fairly quickly once we do see a settling of any military action. So overall, we don't really expect to see the military action directly contribute to a consistent rise in the oil price. We do believe, however, the basic fundamentals as we move into the summer will certainly start to push the oil prices higher.
But actually, this is a bit unfair. You know, for 3 years, we are being told that at $70, the shale gas guys will come in and keep it. I mean, let me tell you, India likes oil bears. We don't like oil bulls as a country. I mean, just give us a range. Should we get used to for this quarter or for 2018, 70 to 80? Or should we expect 60 to 70 to be the range?
No, look, we certainly think as we move towards the latter part of the northern summer that we will start to see the oil prices move higher. We will keep our Brent price at between $74 to $84 at the end of this year, and the WTI price at between $70 and $80. So you can see we're already expecting to see those prices increase. In this quarter, we probably won't see them drift up into the high or mid-70s. We would expect them, however, to breach the $70 level and hold there for some time. And yes, you're right, Latha. What we will see is the US domestic production, which has been rising already over the course of this year, will continue to keep somewhat of a headwind against those prices, buffeting up to that $80 to perhaps even higher region.
But you're expecting 84, 85 despite this record level of production in the US. Every other week we get to know that, you know, production levels are at historic highs and only climbing higher. Even then you expect 84?
Yes, we certainly do. We are banking on the fact that the next northern summer that we're seeing will be a very good one for oil demand. And with OPEC continuing to maintain its 32.5 million compliance, then if demand does rise, then the US production, even though it has and is rising, will not be sufficient to make up the gap. So yes, we are expecting to see with that gap a rise in the oil prices.
All right. David Lennox, thank you very much. My colleague and I have tried to make you sound bearish, but no, you believe that the bulls have the upper hand. Thank you very much indeed for joining us. So let's prepare probably for an over $70 average for at least 2018.
No, it's also a chart call, Lata. I remember, Anuj, if you recall when Jay Bala was on the show, he made a very categorical call that, you know, charts say that oil is going to about 85.
Okay.